Barely. I like it. Ah, there it is. I'm telling you, one day I'm just gonna show up with my guitar and I'm gonna play this riff right over it. It's an easy riff to learn. I just had to apply myself.
I can play it in my head all day. I can play the.
Oh yeah. Hey, your vocals are still very low.
Are they?
Yeah, they're pretty low. I don't know. If anybody else watching, just go ahead and go in the chat to see if you can barely hear Jared or not. If it's just me, let me know.
I start whispering.
Please don't start whispering; it'd be worse. It's like these starting to sound like NPR. Let me whisper in your ears.
Let me see. Let's see. Let's go here. Let's go watch myself live and just see what I can hear.
You're gonna have so much like feedback. Have fun with that one. So while Jared is figuring out his side of things, how is everyone doing tonight, Jared? You and I have been busy bees. So where have you been traveling lately?
Who, me?
Mm-hmm. You're the pilot. Yeah, man.
Dude, I've been going, let's see, San Francisco a couple times. Went to Sao Paulo, Brazil.
Uh-huh. Dang.
That's
Brazil.
that's always a fun trip.
Yeah. So when you flush the toilet, does it go in the counterclockwise direction?
It does, but since
That
we're
weird.
south of the equator, like you're looking at it from the other side, so it's
Yeah.
actually the same. So like if you were looking, it flushes the same way. I was trying to make that funny, but it didn't work.
Huh.
Yeah.
I was sure because it was south of the equator, it flushes counterclockwise versus clockwise here.
Nope.
Ah, interesting. So it's a fallacy. Got it.
It is. It flushes the exact same way.
Oh boy.
And then let's see. I just got back from Rome, Italy. That was pretty fun. Went out and had some pasta and bought a few bottles of wine back with me.
Oh, nice.
So, yeah.
That's got to be a nice little perk, like being able to travel like outside, like the U.S. and being able to bring back like. Do you still have to go through customs, or like do you get a pass?
No, we 100%. Yeah, we got to go through customs. We still got to declare if we bring stuff in. It's just kind of up to the agent whether or not they charge us a duty tax or something. Most of the time, I've actually never been charged a duty tax for whatever I brought in. I've bought some like Louis Vuitton bags and stuff for a friend of mine, and they didn't charge us anything for it. So I brought back beer and wine and all kinds of stuff. So
that's cool. That is cool. I've had some beer from Madrid before, and that was really good. And I think it's as soon as you open it, you have to like consume it because like here in the States, like there's like preservatives, stuff that can last long, but there like they have no preservatives in their beer because their rules are a lot more strict about like what they can put in their consumer goods. And it was absolutely delicious, and it was so fresh. I was like, God, it's one of the freshest beers I've ever had in my life. Like even like through like a fresh tap and everything, it was still just blew it out of the water. So
right.
I actually have the shirt. I'll have to wear it next time, and it has it's like everything has its logo, right? And their logo is like a drunk animal, and I got a drunk pink elephant sitting on a barrel. It was really cool. It was really good. It was really cool.
Can you there's a couple of people that were saying they couldn't hear me, so let me know if you can hear me now. I turned it up. To me, it sounds like it's too loud, but if it sounds good to everybody, just give me a thumbs up in the chat there.
Cool. You sound a lot better now.
Okay.
But definitely at the start, you were almost non-existent, sir.
Non-existent? What?
Yeah, man. Right. I'm telling you, we're here for you.
Yeah, give me a thumbs up if you guys can hear me okay now. I wouldn't want you to miss out on my pearly little beautiful voice.
All right, careful now.
So, Whiskey with an Agent, that's what we're doing. So it's episode 21 tonight.
Yep.
Hey, cool, I got a perfect and a thumbs up. Sweet.
Excellent.
So, Whiskey with an Agent, it's episode 21. Tonight we're going to be talking about what is, I mean, it's, I don't know. I mean, it might be the most important part of buying a house is trying to get your loans in order, which comes
Uh-huh.
with, trying to figure out what debt you have and credit scores. And, you might have student loans, you might have all kinds of stuff. So, that's what we're going to be discussing tonight. I have
Yep.
got a ton of notes that we can go through. I'm sure you do too, Chris.
Yep. And
And
we will try to go as depth as we can with our knowledge and understanding because um, we don't have a lender present, and they're definitely the ones that would really be
oh yeah,
beneficial. But we wanted to have this conversation nonetheless with you guys. So I think as we dive into that, because we're going to hammer about loans, debt, and credit scores and how they all interact with each other.
yep.
So without further ado, we must introduce what we are drinking,
Yeah,
sir.
what are you drinking tonight? So go ahead. Yeah, you go first this time.
Okay. So what I got here is a good buddy of mine. Shout out to Hunter. Got brought this over because we had like a friend's dinner, and they brought over Blade and Bow, Blade and Bow, and
All right then.
it doesn't sound so good when you say Blade and Blow.
Kind of
Everyone's
hard to
going a
say too.
different way.
Blade and blow.
Yeah, Blade and Bow, and it was really good. It's a Kentucky straight bourbon whiskey, and it is 91 proof, so it's 45.5% alcohol. It comes with this really cool key. I've heard a lot about this, and as you can see, we actually consumed quite a bit that night, and it was a lot of fun. And let's see here, and around each side of it is definitely like one key, two keys. This is five keys, three keys, four keys, and the bottle itself is like pretty much a pentagon. There's five sides to it, or six sides to it. Nice. So that's what I'm having.
Nice. Well, I've got a couple of oldie but goodies. I haven't bought a new bottle because I'm like,
Of course
I'm
you not.
looking at my collection I've got over there, and I'm like, probably should just stick with some stuff that I've got. So I'm gonna probably start off with the piggyback. I bought that one. That was per your recommendation.
Uh huh.
The Whistle Pig piggyback. This is good stuff.
Great stuff, and that's
Yes,
the cheapest version of it too.
it is.
Like
I don't remember how much it was though. It was
it's like 40 something
yeah,
bucks.
$40, something like that.
Yeah, it's not that much.
But then I've still got the
Depend
base
on your
pagan
budget.
that I might have a couple of those too.
Yeah, that's
So
some good stuff right there too. I think
you
that's something I
always
also recommended.
what's that?
That's
Yes.
something I think I recommended too.
Yep. You
Ode
always have
Elk.
some sort of story about where you got yours, or somebody gave it to you, or you were like hiking somewhere and some old man told you, and you're like, oh, you gotta try this one. And I went out and tried it. It was amazing. Here I
Yes,
am, just
true.
like, all right, I've got this one and I've got that one. That's what I'm drinking.
Yep. I like to keep things interesting. So I got my friend, my buddy Alex Cole into some whiskeys, and the other night he texted a group of us. It's just like he had a glass of whiskey, and I'm like, "Oh, what are you drinking over there?" He said it was Buffalo Trace. You just can't go wrong with Buffalo
Oh
Trace.
yeah, yeah. They serve that on the United flights, Buffalo Trace. Not to the
Yeah,
pilots, but
it's hard to come by. To
is
be
it?
honest with you, yeah, it's a little difficult to come by on a consumer level. I think they're starting to finally catch up, but
Mm.
I'm a big fan of like Joe Rogan. If anybody else is, that's where Buffalo Trace's stock just went
Oh
because
really?
they became one of his sponsors, and he always has like a bottle of it like right there on his desk where he talks and everything, and it's pretty good. So
Yeah.
we just finished a bottle of it the other night. We were making old fashions out of it, and luckily I still had one more bottle because it's hard to
Oh,
come by. So I ended up getting two bottles. It was great.
Buffalo
So
Trace.
yep, that's another one to try, sir. Uh, so
I'll have to keep that
cheers.
one in mind.
Yeah.
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 Cheers. Cheers to everybody watching. Cheers to you, Chris.
Yeah. Cheers to you, Jared, and your
It's
busy
been
schedule.
yes.
I think 2 or 3 weeks now.
Yeah,
Um,
it's been 3 weeks. We tried to do one last week. I
mhm.
was down in Sao Paulo, and you know what? My internet down there, it actually wasn't the greatest.
Was
So
it the
even if we
best?
wanted to do a show. We had actually planned on doing a show while I was down there, and then we just both of us just kind of fell behind, and then we
Mhm.
decided it wasn't going to work. Plus, my internet down there just wasn't super fast in the hotel.
Yeah,
So,
no.
but
I still drink to our honor, though.
of course, oh, believe me, I did too.
It looks like John over there is having some old elk, or is that what you're recommending, John? Let us know because I'll
I haven't
try it.
heard of that one. Old elk.
Uh, I feel like I have, but I'm not sure.
I don't know. I'll have to
Yeah.
look for that one. All right, so um, talking about loans and credit. So yeah, loans, credit, debt. We're gonna talk about how to calculate your debt to income ratio, because that's pretty much. I mean, that's the meat and potatoes of what they're gonna look at. They're gonna pull what your income is. They're gonna look at all your expenses, and then they're gonna calculate that. And there's certain numbers that you have to or certain marks that you have to hit in order to qualify for certain loans. Otherwise, you start getting into like a case by case sort of situation. Um, but so one of the questions that Chris and I get, or I'm sure you've gotten a lot. I know I get it all the time, talking about student loans, because that's, for a lot of people, that's one of the first type of loans that people get. I mean, aside from maybe they get a credit card or something like that, what you kind of have a funny face looking. What's going on?
Yeah, because you like, I think for me, it's breaking up a little bit. I don't know about everybody else, but it's like your first type of loan, and I think I just kind of misheard, and that's why I like just did like a funky face. So
Oh, gotcha.
don't mind me. Just
Ah,
continue.
um, so yeah, student loans, and I don't know. Maybe my internet is not where it needs to be. Um, what was I saying? Oh, okay. So I was getting text messages and whatever. So yeah, student loans. So that's kind of where people start out, and I don't know where I'm going with that. I need
The
to have
student
better.
loans is one of the first loans that people get, and it's true. Like you get a federal loan, and Pell Grant loans, and there's all kinds of different types of student loans that people get when and you're right, it's the first loan. And the thing is, like, what sucks is that no one really kind of educates you on loans. Parents, my parents didn't really do the best jobs when it comes to loans or educating me. So it's and how does student loans? So since we're on that topic, like how does student loans really affect you and your ability to purchase? So, at first, when it comes to loans, we have to understand that when a lender asks you how much debt you have, they don't necessarily care about how much, like your student loan, whether you have $20,000 or
Right.
$150,000. And if you have a car loan, that is $40,000. And if you have another private loan, a personal loan, um, for $10,000. They don't care about the amount. All right. They care about what's the monthly revolving income, all
Correct.
right, or that monthly revolving payment for
Yep.
those loans. And
And that
that's
was
really go ahead, Jared.
that was one of the things, like, before I got into real estate and before I really started digging into how people get loans and what they're looking at, and talking to lenders and mortgage brokers. Like, that
Mm,
was my mindset was they're looking at my total debt, and then they're taking my total income, like maybe on a yearly basis, and that's my debt to income ratio. But 100%,
yeah,
that's not
the case.
what it is. Just
Mm,
what Chris was saying. They're looking at, so basically, whenever you take out a loan, that loan is going to have a minimum payment. That's what they're
yes.
looking at. They're looking at your monthly minimum payment for
Yep.
that particular loan, and that's what they're using compared to your monthly income, your gross income, not your net, your gross. So that's before tax. So they're looking at your gross income and your monthly expenses, and then that's how they're actually calculating your debt to income ratio. So that
Yeah.
was one of the things, like, for me, I honestly didn't know that until I got into real estate, how they actually calculated
Yeah. Yeah, me too.
this. Yeah.
It really was. It
Yeah.
wasn't until I got into real estate. So I'm like, oh, that's how they do.
Right.
Because I thought the same
That's how
thing.
they.
It's a very common misunderstood element of loans and
Yeah.
getting approval for a home. And so to go back to this, so now that you understand is actually how student loan or just how loans in general and how the mortgage works. Student loans is there's two types of student loans in the sense of you're either paying on it or it's deferred. So if you're paying on it, that monthly payment, whether it be $100, $50, $250, or more, then they're going to calculate that. However, if your student loan is deferred, if your student loan is deferred, therefore you're not making any payments on it. Unfortunately, the way they have to calculate that because at some point in your future of your mortgage, your student loans is going to come out of deferment, right? So they're going to take 1% of the total balance, and then they're going to go ahead and divide it by the total, and then that's what your or times it. They're going to times it by the total amount, and then that's how much they're going to calculate as a future um, debt. So again, if they give you a max loan saying that you can only afford $1,200, anything above that you're going to be house broke. You're not going to be able to afford. You're not going to be able to live. And then if your student loan comes out of deferment and now your payments are $500, and at that
Mm-hmm.
point you can no longer afford groceries, you can no longer afford your house, you can no longer afford anything else. You're going to be really stressed out. And a lot of times people uh, would rather pay for other things other than their house. So they have to calculate at least 1% of your total student debt as a monthly revolving debt. So even if you're going through the student loan forgiveness, whether and there are many different types of loan forgiveness
You
updates
know,
out
and
there.
I was looking at some of those, and a lot of them seem, the ones that they're putting out now for the loan forgiveness. A lot of them have to do with like if you're a teacher, or like it's job specific or industry specific almost. From what I've seen, and have you seen something different other than that?
So there's different types of and thing is you can go on in fact I kind of want to share my screen here because I got student here, let me go ahead and pull up this differences.
So,
So there's
but
different types of forgivenesses, cancellations, and
right,
discharges. All right, there's the teacher loan forgiveness. There's a closed school discharge, which is kind of very common that I've seen with a lot of my clients. They're like, well, my school closed, and so therefore you can kind of get that off. Perkins loans cancellation and discharge, total and permanent disability discharge, discharge due to death, discharge in bankruptcy, which is in very rare cases,
right,
borrower defense to repayment. There's also if you're a public servant after 10 years, and it doesn't, I found out the other day, it doesn't have to be consecutive 10 years. You can be, you can go out of a public servant for say 2 years and then come back into it.
right,
It's a little vague too about the number of payments, and then after that 10-year mark or that number of payments, it will get dropped off. Unpaid. So here's something that's really cool in regarding the most recent student loan forgiveness. That if when the pandemic hit, everyone's payment got deferred, including the interest. The interest never stopped paying.
right,
So it's
right,
essentially you have the ability to pay your student loans interest free. So it's going straight to principal, which in a lot of cases is extremely beneficial because interest rates on student loans are so high, it's ridiculous. So if you actually made payments throughout the pandemic during its deferment period, which ends, I think, December 30th or 31st of this year, the last time they've extended it, you can actually get a reimbursement of all the payment that you've done.
oh,
So
okay,
yeah, so it's really cool. Eligible for parent borrowers, and so actually, I'm gonna go ahead and Jared, if you could post this into, if you feel like you qualify for any of this, go to this website that Jared's gonna post here in the chat, and you can go through and see if you qualify, because there are special circumstances that you can go through and actually qualify for student loan forgiveness.
Hmm.
And my wife and I, because we both have still student loans,
Yep.
we based on the Biden's newest one, whether you agree with it or not, I don't necessarily care. We're not talking about that. If you, we both qualify for student loan forgiveness for under the Biden's plan, and if you go through this um, through the student aid, you'll be able to uh, find out more about it. And I actually found, and if you want to know a little bit more, because there are, I found this article from Forbes regarding 5 major updates on Biden's student loan forgiveness initiative. And I want to share this with you because Forbes is a pretty reputable site. And if you could share that as well, Jared, that'd be awesome for everyone.
Yeah.
So the more people can understand and know, and honestly, just take advantage of this, like you're gonna do just well. And
So do
that's
you
what.
have student loans, or do you think you're going to qualify for any of the
Yeah,
forgiveness? Yeah.
yeah. So based on the information, I'll qualify for up to the 10,000 because I did not
Nice.
receive any Pell grants. My wife will qualify for the 10,000, and she qualifies for the Pell grant because she got some money on that for
Dang.
through the Pell grant. And then so it's also like, did you get married or not get married? They look through, I think up to 2020 and 2021, so of either of those years, not both of those years, either of those years,
Right.
if your income, whether it be individual, which individually is 125,000 for an income, and together 250,000. So either or, because we got married in 2021, and we did our taxes individually and together for 2021, and our incomes didn't, whether it be individual or together, it didn't supersede that income limit. So we both technically qualify for both of these for these forgiveness, and it'll be extremely helpful.
Right.
Yep.
How did so for me, like, one of the, when you're in college, you're going to you're getting
Mhm.
in, trying to figure out how you're going to pay for it, or going to school, or whatever you're going to do, and you're taking out loans. For me, like, I wasn't really thinking about the long term effect of having. I mean, obviously you got to pay them back, but then how that was going to affect my financial situation to eventually buy a house, and how much you can save, and everything like
Mhm.
that. So for me, it's sort of, having student loans. So yeah, if anybody's, I don't know if anybody that's in college is watching this, but really think about the future impact that it's going to have. And the reason I'm saying that is because, like I said, for me, when I was when I graduated college, and I was getting into the airlines, I still didn't really have, paying all these student loans, and the money I was making at the airlines wasn't very much. I didn't have enough money to go out and buy a house. I had a hard time saving money because majority of it was going towards bills and
Your
paying
student
my
loan.
student loans.
Yeah.
So,
You really
you
just need
know,
to call them. Like you need to call them and be like, "Hey, listen, like I want to continue paying my student loans, but this payment is killing me." Now,
yeah,
and if the servicer, depending on who your servicer is, a lot of people don't know this, is that you can actually request a transfer of servicer. So you can and find somebody that. So if your payment is, astronomical, I've heard of some payments are like as high as like $1,000 for student loans,
oh yeah,
and some of them require your payments to be income driven. So if you meet
right,
a certain amount, whether you're married or not, if you're not married, it's one payment, but if you're married, it's going to increase because technically your income is increased, which is freaking ridiculous in my opinion.
yeah,
Um,
yep.
so just because my income, our together income increase, doesn't mean like I should rely on my
You should,
spouse to pay for my student loans long before we ever met. It's freaking
right,
ridiculous.
yeah,
Um, so I was going to kind of go with this. So if your payment is like say over $1,000, which is ridiculous and it's killing you, if that servicer is not willing to like reduce or work with you to a more manageable one, then go ahead and call around, call other servicers. Just Google student loan servicers. Call
Yep.
student Nelnet is
Yep.
one that I use. I love Nelnet.
Yeah. Yeah. Yeah.
And
They're
just be like,
really
hey,
good.
yes, I would like to discuss transferring my loan, my student loans from this servicer to you,
Right.
but I want to negotiate terms now.
Yep.
Are you income based, or can we negotiate? Because right now I'm paying X. This is killing me. I'd really like to pay, Y,
What? Yeah.
Z.
Yep.
Could you do that? Yes, no, awesome. So in that way, you can actually increase your affordability if you're looking to purchase a house.
Right.
So there are ways to do this. We just, unfortunately, we're not educated to play the game that has been provided us behind
Right.
these closed doors.
One of the things I
So,
did was I went
what do
back. So I mean, I'd paid off a couple of the loans, but I still had several different ones from a couple of different servicers, and I went in and I refinanced, essentially refi consolidate, I guess is the right term, is I consolidated a couple of those loans into one. Ended up being a little bit cheaper interest rate, and it lowered my payment just a little bit. So that's something else that, if you're having a hard time, especially if you have multiple servicers, two or three that you're making payments out to all these different people, consolidating it into
yes,
one thing,
yeah.
it makes it easier just to make the payments for it.
It
And
it really is, because if you have one servicer, that just makes things easier for in terms of paper trail too.
right.
That
Right.
way, because when one of the things that you'll have to do, if you're making student loan payments, and one of the things they have to do is the lender is going to ask for some of these documentations. When Bethany and I bought this house, we I had to provide student loan information. So if you
Mm-hmm.
have, say, like four servicers,
Right.
that's tedious, because it's not
Yep.
a, hey, send me this information. It's more like, wait 24 hours because we can't email it to you. We have to mail it. Fuck. Okay, that's what I gotta do. So that's one of the reasons why I highly recommend Nelnet. Nelnet is awesome. All of their paperwork, documents, transcripts, and stuff like that is all online. It's super easy, super friendly, and they have been able to work with me on all kinds of loans, or
Yep.
like restructuring through over the years.
Yep.
So I recommend them. So kind of going back to it, so just kind of remember, if your payment is deferred, 1% has to be calculated, and that's something that you can do easily. So say, like, if you're I'm going to bust up my calculator. So say if my loan is $50,000,
Right.
times 0.1%, that's $500 a month that the
Right.
lender is going to have to calculate.
Mm-hmm.
However, if the lender is saying, call them, find out if you can get out of deferment, how much could that payment be? Okay, call them. Yeah, we can actually get your payment to about $200 a month. So at 500 minus, just simple math, two minus 200, you just freed up $300 worth of income. Now, $300 buys you a lot of house, a lot of extra house. A lot of people
Oh
don't
yeah.
know that either. You can
Yep.
purchase a lot more home with $300 a month extra of income.
Yep.
So it's really finding a lender that knows these creative outlets. So someone who's experienced, and also an institute that has creative ways. But there's
Right.
honestly no way around to not calculating your student loans. Whether
Right.
you're in the middle of getting it discharged because your school closed, it doesn't matter. Unfortunately, your name is
Right.
still tethered to this loan. They
Yep.
still have to calculate it until it's literally removed.
Yep.
And so
And one of the
that's
things,
kind of the nature of the game.
you got to be responsible with not just student loans, but all your loans. But I mean, student loans are probably the easiest ones to kind of let go to the wayside and just not, there's a lot of defaults. There's a lot, it sounds like maybe you were in that situation. I know I was, and that at one point, I
Yeah.
just defaulted. It was just one of those situations where it's like, holy cow, man, it's so much money going out, and I don't know
Yeah.
how to deal with it, and I just kind of looked
Yeah.
the other way for a little bit. Next thing you know, it's like, oh, I'm getting letters about, hey, you defaulted on your loan. It's your credit score is tanking, and so
Yeah, I
don't
was
let that happen.
I was
You know,
that I was that naive person
yeah.
in my mid-20s. I
Yep.
did not care
Well, if you
whatsoever
think
about
about
my
it, man,
student
you
loans.
these
My
these
credit tanked.
yeah, these
No
banks
idea.
are lending, these people, banks are lending money to people that are
Kids.
18, 19 years old that, they're
17. Yeah.
they're giving them like
Yeah.
70 grand depending on, what college you go to, but like a
Yeah.
local college here, it's 70 grand for the year. They're giving them
Yeah.
70 grand. It's like, "Oh yeah, here you go. Here
Children.
18-year
Yeah.
old, 19-year-old."
And on top of that, let's go ahead and if you don't pay, then we're gonna go ahead and stifle from or garnish your wages. We're gonna garnish your social
Right.
security. You're retired? Oh, I don't care.
Right.
And it was crazy, like even beyond death, like in some cases, they're forcing
Yeah.
next of kin to pay for their freaking student loan.
Yep.
Like it's so mind-boggling
They'll
how
even
these
they'll
companies get
even
away
take it
with
out of
it.
your they'll even take it out of your tax return. I had that happen to
Oh
me
yeah, yeah, yeah.
uh
They'll
a couple
garnish
of
anything they
times.
can.
Yep.
And they do not care if it
No.
wipes you out.
Yeah.
Like if you only get $1,200 a month, and I like the student loans, they don't care, and so it's just $1,200 a month, and that's all that you're allowed to live off of.
Yep.
And the government's going to come through and take $1,000, leaving you with $200 a month. They don't care.
Right. They're going to
And with
get their money. You have to be able to, or have the mindset to call them and just say, "Hey, I can't make the payments." And they'll honestly work with you. No different than
yeah, because they want
any
to get paid.
other lender on some sort of loan. If you call them up and just honestly like, "Hey, I cannot make this payment." The bank wants their interest. They want their money, so they're going to work with you to try to work it out. So,
Yeah,
biggest thing
I
is,
think so.
so
You
what
just
we're
can't let it get that far. You cannot
yeah,
get it
just don't let it
that
get
far.
that far, because in the end,
Yeah.
at the end of the day, and the end result is you want to be able to have a good credit score and buy a house or buy property or use money to invest in a property or real estate or whatever the case may be.
Yeah.
And there's more than just student loans. We've kind of talked about student loans, quite a bit, but I mean
It
that
makes sense
goes with
because it's a heavy subject, and a lot of people have questions about it, especially with the new student
right,
loan forgiveness that Biden has put out.
right,
A lot of people, and actually, how we got onto the subject is from a friend of mine, Caitlin, and she's just like, "You really need to talk about this." I'm just like, "You're right."
yeah,
So here we are, and so I think it's
yeah,
super important because that's probably the biggest unknown yet talked about but not talked about enough in detail or nuance for the public because
right,
everyone just talks about student loan forgiveness but no one wants to have in-depth detailed long conversations about it, and that's what's so frustrating I think for the general public when it comes to this subject is that no
right,
one's willing to talk about it in detail through the thick, um, having those complex and difficult discussions because when you have difficult discussions, that's when you come up with solutions.
right,
And then if you face your issues head on, it's not going to be easy. It's not going to be cupcakes and butterflies and rainbows. It's going to be a grinder because you have to literally dig yourself out of the grave that you dug. And no one else is going to grab you or help you. And unfortunately, this current student loan forgiveness is a one-time thing. It really is. Like it's not going to be something that's going to be there perpetually. So like, yeah, we're going to eliminate, a couple $1 billion worth of debt, I would imagine. But all what about the next people who are coming up in the school system right now? They're Nothing's going to happen to them. Like they're not going to get this advantage. So
right.
it's kind of shitty. It's shitty, you know. Um,
Yeah.
but that's just again like we live in a game of Monopoly, and you have to play it in order to win it. So the way to win it is to
Yeah,
win it.
just be familiar with it,
Yeah.
understand what the risks are and how it can help you or how it
Hmm.
can hurt you. Help you by, you are opening up a line of credit, and that is starting your credit history. So that's one of the things that you were going to talk about as far as how to a little bit later how to raise your credit score. And one of those ways is to have credit history. because
Yes.
that plays a factor in student loan. It does go onto your credit report. So whenever you have that, yes,
Mhm.
you are now building credit.
Yeah. So
And
let's
then
let's
same
talk about that.
well same
Let's.
same thing with other types of loans or debt. You know, you got auto loans. You know, different credit cards. That's probably
Yep.
the most common way. I think credit cards is one of the most common ways.
It's common. It's very easy to build credit. It really is. And then even if your car loans, let's just quickly touch that. If your car loan's
Yeah.
expensive, call your servicer and try to negotiate a lower payment, and therefore you'll free up more ability to purchase a
Mm-hmm.
home.
Mm-hmm.
So the so say if you have dog shit credit, like where I was, and no credit card company would give you a credit card. The best way to establish some credit is what I found out is to do a secured credit card. And do you know
Okay.
what that is, Jared?
Uh, you have to back it with some sort of funds or something like that.
Correct.
I'm guessing.
Yeah. So if you go to your bank or your institution and say, "Hey, listen, I would like to open a secured credit card. What is your minimum?" Because a lot of places they have a minimum. Okay, so
Right.
our minimum is $500.
Mm-hmm.
This was mine,
Mm-hmm.
and it said our minimum is $500. And what we'll do is we'll take that $500 that's in your account and we'll put it in a perpetual pending state. So it's not cleared and it's not something you can use. And then we're going to give you this credit card, and it's going to act like a credit card. You use it till you meet your limit, and then you pay it off at the monthly statement. And one of the things that you need to realize when it comes to establishing credit is you have good use of your credit. You cannot be maxing it out and then not pay it off or pay it off. What you want to do is stay within a 30% ratio, 30% of the total limit. Say your limit is $500. You want to do times zero point 0.3. So you want to
Yep.
stay about $150 and less.
Right.
So gas, fast food, something small, and then you want to pay it. Okay, and there's two things to remember as well when you're making your payments. Is that there's a payment date. So say
Yep.
if my credit card is due, my payment, my $150 is due on the 24th of each month. Great, boom, I paid, zero balance. The next thing you have to remember is that you have a report date. The report date will then take your credit card statement and then report it to the credit card bureaus. The credit card
Correct.
bureaus, TransUnion, Equifax, and Experian. Okay. So if you pay $150, you wait, say, 2 or 3 days to whatever your due date is. And you can find this out by asking your creditor, hey, when do you report this to the IRS, or not to the IRS, but to the credit bureaus? Oh,
Mm-hmm.
we report it on the 26th. Okay, now I know. I make my payment on the 24th, and 2 days later, it gets reported. So, what you want to make sure you do is that you want to wait until after that report date. Because if you make your payment and then you go out the next day, the 25th, and then you go and you spend $300. You're going out to the club or going out with your friends to a restaurant or buying something nice for yourself or your significant other. Well, on the 26th, it's going to report that, yeah, you made a payment, but you just put on a $300 balance. Boom. Now that's over the 30% maximum, or not maximum, the 30% ratio, the healthy ratio, and it's not going to help your credit. It's going to hurt your credit because it's not showing responsible practices. So you want to stay within that 30% utilization, and you want to wait until after the report date. And if you do that for 3 months, 4 months, you will see your credit skyrocket. I kid you
Yep.
not. It will just absolutely skyrocket because you've been showing a healthy usage throughout the month and
Yep.
you've been paying it off. Sometimes it's really good. So say if the balance or the payment, the minimum payment is $150, sometimes I will make a payment of $120 and I'll leave that $30 balance.
You leave
And
a
then
balance on there.
sometimes, and then when it goes to the next month, I'll pay it off completely and let it report as a zero balance.
No.
So therefore, it shows that yes, you have good utilization, but you'll also left a small amount of debt there, showing that you're very responsible with your debt. Because I mean, you got to show the credit bureaus that you know how to handle debt, right? So leaving a $30 balance is debt,
See, I've
right?
never heard that before. I just figured so I and the whole credit score system is so
It's
weird
fucked.
and
It's so fucked.
and 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 crazy the way that they score you. So from everything that I've read, it's and I've not heard that particular method where you would leave a little bit of a balance. I've always thought if you pay the balance in full, number one, you're
It
you're
just shows how you're
you're
showing
paying
that you know how to. You're just showing that you know how to use a credit card, but you're
right,
not showing how you know how to responsibly handle debt.
right. So you're paying your credit card off. Number two, the only thing I don't like about leaving that $30 on there is you're going to get hit with an interest charge the next month before because so if you don't pay the statement balance at the end of the month, when that $30 carries over to the next month, you're going to get hit with whatever your interest rate is. You're going to get hit on that $30 or whatever it is that you're carrying over to the next month. That's the only thing I don't like
Yeah,
about that.
you're
So if,
not wrong. You're not wrong. But some credit cards will have a zero balance. Like my secured credit card doesn't have an interest on it.
well, yeah, if you're lucky enough to have a 0% interest rate, but if you're new to
Yeah.
credit, like a lot of these, for people that are trying to build their credit and stuff like
Mhm.
that, guaranteed you're going to have some sort of interest rate. You're not going to get the 0%, for 6 months or 12 months
Yeah,
or
you're gonna have
whatever.
to establish some good healthy
So,
and
but 100%, yeah. If you have one that's 0%, then that works out. If you have one with
yeah.
an interest rate on it, for me, I don't think I would have a hard time leaving that $30 balance because I don't want to pay. I want to pay
Well,
the credit card as little as I can,
right,
or
I
pay.
understand that, but if for the scenario that I just painted, so like if you leave a $30 balance, and even at a 22% interest rate, you're only paying $6.60 on top of that.
That's a couple gallons of gas, my friend.
That's yeah, about two
That's
gallons of
that's
gas.
that's a couple of
You know,
gallons of gas.
I don't
You
disagree
know,
with you whatsoever, but
that's a night. That's dinner. That's McDonald's. A hamburger, and you know, I can
you should be
either
saving
pay
that money
interest to this.
anyways.
I'm just saying because
Yeah.
I was at the point at one point, at one time where I could barely afford to put gas in my truck to get to work to make money to put gas in my truck. So it was like, so spending that extra $6 in interest, I'm like, man, if I spend that $6, that's $6 less in my gas tank to go to work to make more money to put gas in my truck. So then that's my mindset. If I have to pay interest, I don't like paying interest if I don't have to.
Right, I'm with you 100% because interest sucks. Um,
Right.
and so I don't disagree with you whatsoever. But if you're lucky to have like say have like a zero
Well,
interest
of
rate,
course. Of
then
course.
leave a little bit of a balance as small as possible, showing that you know
Yep.
how to properly handle debt, and then the next month pay it off completely and
Right.
let it report.
Yep.
So that's how you can establish some credit building.
Yep. So
And so
and let's back up just for a second. So there's a lot of stuff that we just mentioned during this whole conversation of credit scores and credit bureaus. So if you're not familiar, the credit bureaus there's three of them. There's what is it? Experian, TransUnion, and
Equifax.
Equifax. So those are the three main. I don't know. You call them a monopoly of your credit score. There's three
Yes, that's
companies.
correct.
You don't really have a choice or anything of who's getting to decide or keep track of anything. And by the way, if you have credit and your name is with any of these credit bureaus, it has been your identity has been compromised in some way. Especially, was it a couple years ago or back in 2018? I think it was Experian. They had that huge data breach where they
Oh yeah.
somebody they got in there and they just stole tons and tons of
Data.
our data, our
Yeah.
identifying information, our names, date of birth, all that stuff. And what happens to Experian? a little slap
Nothing.
on the hand,
Slap on
and
the wrist.
a
Yeah.
couple of fines here and there, and then we move on and we keep giving them our information. Man, it just I don't know. Every time I start thinking about this stuff, I just start it the whole credit
What
score
grinds your
system.
gears? Yeah.
What's that? It just
What
what
grinds your
grinds
gears?
my gears. If I had, and that's, to be honest, that is one of the things that makes me, that is my drive to keep making money and investing, and just to be able to try to pay cash for everything, just so I don't even have to think about the whole stupid credit score
Yeah.
thing.
Like
But
it's the whole credit system and everything. No matter how much it grinds your gears, and it grinds my gears, just like how insurance
but it,
grinds my gears. It's
yeah,
something. It's the game
we
of
still need it.
Monopoly. You know, like
Yeah.
do you?
Well, I mean,
Do we?
we do, because without it, I wouldn't be able to afford this house. I wouldn't be able to
Yeah, I
afford,
mean, it's true.
whatever.
It really is. However, here's the catch. Something I think not a conspiracy, but like a thought that allowing people to have credit allowed companies to increase their prices.
Yes.
Whereas if we never had credit, prices would still be like they were in the 40s to
Right.
50s, long before credit was even established. Because if you correlate prices to goods, commodities, everything that we have at our first world country, if you correlate the inflation of price, the increase of price to when credit was introduced, you'll see that it's just right with it.
Yep. Oh yeah.
So I agree that credit sucks. Like this whole idea of it is just like a social score, in my opinion.
Yeah.
Uh,
Basically,
but at the same time,
I
it's
think I would rather
allowed
have a social
people.
score.
No, no, you don't. You don't want a social score.
Well, maybe
You don't
we're
want. You
probably
don't
not we're
want.
not talking
You
about the
didn't.
same. Yeah, we're. I know what you're talking about,
Okay, cool.
and that's a whole different. That's a whole
The
different thing.
whole
I'm
fucking
I'm
different thing.
thinking. Yeah. Um, but so
Anyways.
so so you got these three big credit bureaus.
No.
So but they're, whether you like them or not, and obviously you probably know how I feel about them, but I still have to know what they are, how they affect my credit,
No.
how to keep track of what is being put onto these credit reports by these bureaus,
Yeah.
and whether it's legit. So there's a couple of, one of the so the service that I use is Credit Karma, and that's, for me, it's super easy. I don't know if you've heard of it, Chris,
Very
but
familiar with it.
you don't look like you're a big fan, but I use it
No,
just
because it gives
to.
a false pretense of what your credit score is. It gives
I
you a
don't care
false
about
pretense.
look. I don't care about the credit score on there, because it's never
Okay.
accurate. Every time I look at
It's so
on there,
inflated. It's so inflated.
it's no, mine's like super low on Credit Karma, and
Really?
every time I go to pull credit, I'm like, I think it's like 650 or something, and then they pull it and it's like, oh, you got like a 750. I'm like, that's weird.
Dude, exact opposite for me. Like it
Really?
shows 748, 749. Literally, so my wife and I are going through a HELOC right now. So I
Yeah.
had my credit pulled. I felt so confident to be in like the 740 range, while she's at
Okay.
like 780, and
Okay.
it came back at like 660, 696, and I was just like,
Okay.
what the hell, man? I was so mad.
Dang.
I was
So that's so weird,
I
because
was so
mine's
mad.
is total opposite. But you know what? I use it more to see all the accounts that I have open, all the loans, the debt, and
Okay.
everything like that. So it's sort of
Okay.
like, I mean, you need to keep track of your credit report, not just your
Yeah.
score. There's other ways to check your score to see if it's accurate, or to get more accurate scores, but to check your actual report,
Free
Credit
credit
Karma is pretty
report.
good.
Well, free credit
Free
report
credit,
is really good too because
yep,
it'll show
free
you if
credit,
there's anything in cancellations. If you have anything
yes,
like cancellation in collections, excuse me, and that's something
correct,
I kind of wanted to get into too because that's
right,
all very important because that will show up anything that's derogatory, anything that's in
yep,
cancellation, will it be medical payment that you didn't know or something, any
right.
disputes, and these things will hurt you.
Yeah.
So
So that's why it's so important to look at your credit report at least
regularly,
once a
once a
year, if
year,
not, more than, at least a couple
yeah.
times. Or, I mean, I check my Credit Karma at least once a month. There's another one. It's called Credit Semi, I think. I've not used that one.
I've
I don't
heard
know
of
if
that.
you've heard of that one,
I've heard of that one.
but
I don't use it though.
you gotta check, especially if you're getting in the mode to, whether it's buying a house or any kind of a loan or taking out some sort of debt or something like that.
Mhm.
You really want to start looking at, what's going on with your credit report, because identity theft, that happens. It happens all the time. One of my cousins, she mentioned it to me earlier before we started the podcast. She had um, a close call where somebody was trying to steal her identity. They were trying to open up a line of credit on her information.
Wow.
And yeah, so and had she not been, I don't know the full story of it, but I assume she caught it on her credit report and was like, "What the heck is this?" and was able to, hopefully mitigate it.
Yeah,
So,
that's true. So it really is important, that's something that we do, and you're right. Like we do need to monitor that. So try to look at your credit report, go to freecreditreport.com.
yep,
I actually go through this a lot with my clients who are not sure about the credit score. Because right now, like a lot of mortgage companies, ever since the pandemic, they have really increased their minimum credit score. And when the pandemic hit, they increased it from about 550 to about 640. Some of them have reduced their credit limitations to about 620, but that's still respectfully high in comparison to what a lot of people have, unfortunately, just because they're not paying attention to it. So talking to a lender, really get an idea, have a mode, a roadmap. What are your opinions on credit repair companies? What's your opinion on credit repair companies, Jared?
I've never used one. I've known some people that have used them, and they're great. I mean, they're really good at what they do. It just depends. I think it depends on how bad your credit gets and how bad it is. There's a lot of things. There's a lot of good things they can do. They will call um, all your lenders, your credit card companies, and they will negotiate things on your behalf to try to get payments reduced so you can start paying off some debt faster to try to lower that credit utilization. And there's pros and cons. I've never used one for myself, so
Mhm.
I can't speak firsthand on it.
I have mixed opinions on it because I have had clients use them, and we'll have your credit jump, X points over next couple of months. Next couple of months,
Right.
the credit score has gone down because what these repair companies are doing, they're not only fighting or disputing, they're disputing everything, which can hurt your credit report, your credit, but they're also constantly pulling your credit and
Right.
just to check up on it, and it's not helpful. I don't see it being beneficial. And if you have disputes that you want to dispute or have these collections or things to drop off, these are all things you can do yourself.
Yeah.
Download
It
your credit
is.
report, because on your credit report, if there's something in collection, it's going to tell you what the name of the company is, and
Yep.
it's going to give you a phone number. And you just
Correct.
honestly have to play the game. You got to call them, go through the prompts, and be like, "Hey, listen, I would really like to have this removed. Make sure you ask for them to send it over in writing that you're going to have it canceled and dropped off." And it's I mean, it's something, it's very tedious, but it's something that you can save a couple $100 and just do yourself, which
Yeah,
I
but
kind of recommend.
on the flip side of that, a lot of people don't know what to say when they
Mhm.
call up a company. They don't know how to get started. They don't know how aggressive they have to be. No
Yeah.
different than, if you're going to
YouTube
force.
University.
Right. But I
It's a
mean,
smart ass answer. It really is. It's a smart ass answer, but I mean,
at
like
this
YouTube
at the same time, I
University.
mean, it's sort of no different than when you go at it, doing for sale by owner. You're kind of, you have an idea of what you should do and who you need to talk to, but a real estate agent is doing
Gonna
this
be
every
better.
day. They're doing it all the time. They're going to know what to say, when to say it, how to say it, who to
Yeah.
talk to, when to talk to them. Just like,
Okay.
one of the credit people, they're going to call up these companies. Or, another example is you can go fight your own speeding tickets, or you can hire a speeding ticket company to go there, and they know exactly how the system works. They know exactly what to say to get you off the ticket or whatever the case is.
Yeah.
To me, it's kind of the same thing for these credit companies that are going to raise your credit score. They call these
Mhm.
companies up. They know exactly what works and what doesn't work, and they're a third party. They're removed from the emotional side of it. At the same time, if I call somebody up, I mean, I'm arguing over my money. I'm
Mhm.
arguing for, so it's going to get emotional. I'm going to get stressed. I'm
Right.
going to get mad. I'm going to get whatever, especially when they're not telling me what I want to hear. The third
Mhm.
party's going to be like, "Screw you, buddy. You're going to do this,
Yeah.
or that's it." He can
Yep.
say that on my behalf. I don't know if I could, because it's going to be harder, I think. So
Yeah.
yes, it can work. You can do it yourself, but
I don't
time,
disagree because I mean a lot of
I
people get pretty emotional when it comes to money. So
yes, and it's another
I'm
one
the
of those
same way.
things. Time value headache. How much time are you going to put into it? How much value are you going
Yeah.
to get out of it, and how much headache is it going to be for you?
Hmm.
Um, that's a big proponent for me, is that whole time value headache. Not time. I mean, time value money, yes, but time value headache is just as important, because
That's a good way to look at it. Time
if
value
it's just
headache.
going to be too much for me to take care of, and it's just going to cause me more stress and headache than what I want to deal with, then sure, I'll pay, the few $100 to have somebody else do it. Why not?
Hmm. Okay.
You know.
I hear you. How about
So
what about credit? Like say having lines of credit. So if you have multiple credit lines, so say if you have like 5 credit cards,
yeah.
and you're only using like one of them, it would it be beneficial to keep open all of them or to close them?
So having open lines of credit. So one would think one would think that you would want to close some of these lines of credit, because you're like, oh wow, I've got all these lines of credit. So based on, I was actually watching some videos. There's one guy that I follow on YouTube, Graham. I think it's Graham Steven. I can't remember. He has a really good video. I'll post it here in just a minute, but or once I find it. But he was talking about having lines of credit. It's actually better. It's so he was saying 10. It accounts for 10% of your score, and having 21 or more lines of credit is actually what is, will get you closer to that perfect score,
Oh my
according
god,
to the research that he's had, or that he's done.
that's nuts!
Um,
I think I found it here. It's Graham Stephen.
Graham Stephen, yeah, yeah.
Yeah. So here you
So
go.
he's got a really good video on how to improve your credit score, and it's about 15 minutes long. And he's got a lot of other good investment videos. He's done a lot of good things as far as investments and real estate
Yeah.
and all. But essentially, he's what it is the more credit you have, the more lines of credit you have open,
Mhm.
the more
The higher your ceiling, the higher your
the higher
ceiling is.
the higher your utilization is going to be, or the higher available credit,
Oh no.
not utilization, the higher
Yeah. No. No.
available credit you're going to have.
You want the
And
ceiling to be here, and you want your
correct,
utilization to be down
correct.
here. So thirty
So
percent, 30%
right,
utilization.
right. So if you have a bunch of credit cards open, but you're not using
Yeah.
them, so now your ceiling is way up here,
It's
but you're
coming
only
down.
using
So you can see like this is what's happening to your ceiling. So the moment you start closing your accounts, it's going down. So you want as high ceiling as possible,
right,
and then that because this also calculates into your debt to your income or your debt utilization right here or
correct,
your debt ceiling.
correct.
So the moment you start closing accounts, it's negative because boom, you just slashed it. You close another account, boom, slashed it. And like what's happening, the ceiling is a lot closer to
Right.
your debt and you don't want that. So
And
you want so having 20 accounts though, whew, that's a
yeah.
lot.
Well, but
That's a lot.
it's just, it goes back to the, you have that many lines of credit open. When a new creditor comes and looks at you, they're like, "Wow, okay, 20 people have given him some sort of line of credit. He must be
Mhm.
legit. He must be good." No different than our podcast, if there's 100 people watching it, or if there's 6 people right now, if there's 6 people
Mhm.
watching it, people are like, there's only 6 people watching it. Same thing with creditors. He's only got a couple
Yeah.
lines of credit. If we have 5,000 people watching us, then somebody's gonna be like, oh wow, they've got 5,000 people watching them. They must be doing good. Let's
Mhm.
let's give them a chance. We'll check it out. It's the same thing with creditors, and that's where that comes from. With having more lines of credit
Yep.
will
And good utilization, constantly putting in the reps because a bodybuilder doesn't, get, as big as they are from doing just, one. They do multiple consistent behaviors over a long period of time. And that's how you build your credit strength. And so over the next several months or years, hopefully, you're not getting hard credit pulls either, because the more credit pulls you have in a short period of time, the more your credit starts getting docked and starts hurting. So that's another thing. So hard inquiries. There are soft inquiries and hard inquiries. Hard inquiries is the one thing that you want to have as little of over a long period of time as possible. So Credit Karma is really good on an educational level. It's free. Um, and you can also just kind of Google it too. It's just like, what's a hard inquiry? How
right,
long should I go without having to do a hard inquiry? So if you're
right.
trying to like build credit, try to start off with as little inquiries as possible. If one credit card company doesn't approve you, then you
Mm-hmm.
probably shouldn't go to another credit card company because they're going to do the same thing. They're going to do a hard pull. If they don't approve you, don't go to another one because it's going to do a hard pull. And you're just kind of digging the hole just a little bit deeper, even though you're trying to do better. So you're better off
So
going to your bank to do a secured credit card and do that for about a year.
so is it work? So I know um, when you have hard inquiries, like when you're shopping for a mortgage or an auto loan,
Mm-hmm.
and you get those inquiries, those get grouped into one pool. I don't know if credit
Uh,
cards do the same thing. So, and it you seem like you don't
I
trust me
don't.
here what I'm saying.
Well, no. Go ahead. Okay, go ahead. I'm just thinking. I'm thinking. I'm gonna let you finish.
So like with mortgage, when you go to a mortgage broker or a lender or whatever, you're pulling out a auto loan. You can go. The whole point of this is to be able to shop for different rates or shop with different lenders before. And I don't remember what the date was when they made this a thing, but there was a time where if I went to ABC lender and I checked, they pulled my credit score and they said, hey, we can do a 5% interest rate. And then I go to XYZ lender, they pull my credit score and they're going to give me a different interest rate. Those two inquiries showed up as two hard hits on my credit score.
Mm-hmm.
Now, since they've passed, there was some law or some change to the credit reporting. If I go to ABC lender and then I go to XYZ lender, that shows up as just one inquiry. As long as it's within, I think it's like a 30-day period, or there's a certain time window where those two inquiries will show up as just one hit on your credit report. So, what that allows you to do is shop for different rates. Because what was happening was you would go out and you would call this lender and you'd get, a bad interest rate, but then you're like, well, I don't want to call anybody else because that's going to be another hit on my credit score. And it's just going to keep getting worse and worse. And my credit score is going to keep dropping and dropping. So it
Right.
prevented people or discouraged people from wanting to shop for more or shop around for different or shop around with different lenders.
Right.
So, and I
So
think it's
I
the
think
same thing for auto loans. I don't know if it does the same for credit cards or not.
I don't know. I don't know. I really don't think so. Because every time your credit does get pulled, it shows up on your report. So when it comes to mortgages, I think you're right. I know you're right that they
Right.
group it into essentially one type of pool because you, as a consumer, have a right to shop. Whereas, excuse me, an auto loan, they hit you hard because they count it as individual pulls. Because an auto dealership is just going to try to find anyone that's willing to approve you. So, and they don't, I don't think it clumps together because when I got my car and I shopping, I got hit by like seven creditors or
Yeah.
seven entities before one finally approved me, and
Right.
my credit score tanked.
Tanked. Tanked.
It tanked.
Yep.
But if you go for a home loan, it doesn't happen the same way. It's so long as you're within the 30-day period. I think you're right, 30 or 60-day period. You have a right to shop, and so therefore your credit doesn't take a hit. Even from the first pool, your credit doesn't drop significantly because the credit bureaus understand that majority of buyers have to finance, so it doesn't make sense. Whereas a car is considered a luxury, not a necessity. A lot of people can pay for a car cash, which
Mm-hmm.
happens a lot more than people think. So therefore, it's hard. They are a hard inquiry, and that's why it's easier to get approved for a house than it is for a mortgage.
Right.
Sorry, than a car. Sorry, it's easier to get approved for a house than it is for a car.
Yep. Yep.
So, because like I can go to every single banking institution and get approved, but not every single institution is going to approve me for a car.
Right.
All
Exactly.
right.
Yeah.
So,
And as far
but
as inquiries, you ideally, obviously, you want to have zero inquiries on your credit report. That's going to give you
yeah,
the maximum, boost on your credit score. But
yep.
but they only stay on your credit report for like a year, or they affect your
Two
score for
years, right?
well, I think they affect your score for just 1 year, but they stay on your report for 2 years. Is what
Ah, you're right.
I was reading. So
Yeah, I
um,
think you're right about that. And I think
yeah,
if you have zero hard pulls over a year, you'll see a good increase of your credit.
yeah,
So you can increase your credit in a very short period of time.
yeah.
Say like 3 to 6 months. That's what I mean by short period of time. It's 3 to 6 months
You
because
know,
that's
one of the
realistic. Because it has to. You have to show consistency.
yeah,
Um,
one of the things
it's-
that I keep up with to try to increase my credit score is I'll call my credit card company and ask for a credit increase on
yeah,
my
yeah,
credit card. It sounds
yeah,
counterintuitive. They're like, "Well, what do you mean? They're gonna let me spend more money?" Well, no. I mean, yes, theoretically, yes, they're gonna let you spend more money, but the goal is to not spend more money, but you're just
yep,
raising again what we were talking about. You're raising that
yeah,
ceiling,
yep,
that the amount of credit available.
yeah,
And so yeah, so if
yeah,
you have $5,000 on your credit card, say you're paying it off every month, but you have a balance of $5,000 with a
yep,
$10,000 available credit, that's 50%. But if you call them
yep,
up and say, hey, can you bump me up to like 15 or $20,000? Well,
yeah.
look what you just did. You just decreased your utilization
Uh huh.
significantly just by asking for a
An
credit
increase.
increase.
Yep.
So that's one of the little tricks that
And
and
they're
again, this
happy
just
to
goes
give it to
back
you
to
too. They're happy to
oh
give it to
yeah,
you
yeah,
when you're good and you're
yeah,
healthy, and they'll look
yes.
back at your history and be like, absolutely, Jerry
You've
will be
made
more than happy to give you a
yeah,
five
you've made
thousand
three
dollar
years worth of
increase.
on time
Sure.
payments. Sure,
Yeah. And
but
some will do it automatically. Have you
yes,
noticed that?
yep.
And when you're a homeowner, this is probably one of the best things you should get, depending on your store.
Oh,
You
okay,
know,
the Home Depot
a
card.
Home Depot credit card,
Oh,
because as a homeowner, you will always have home projects. And so, why not take advantage of your Home Depot or your Lowe's or whoever it is? Get on their credit because they report to the credit bureaus. And
right.
we did 2 years of good. They actually increased our limit automatically.
Oh, okay.
Some credit card companies will do that automatically after good consistent payments of and everything. So after 2 years, they increased it $250 for us, and on top of that, 0% interest. 0% interest.
For how long?
So the entire year, that's still 0% interest
But I
right now.
mean, so it's 0% for a year, and then it jumps to a normal.
Nope, nope, still zero. So
So
zero
like
percent
for the
interest.
life of the card, it's 0%.
So far, I look at it and I've let it roll over, and there's no on the statement it says
Hmm.
0%. There's no
That's
interest.
in,
There's no
that's
interest rate.
that's
So
interesting. I didn't.
as a homeowner, it's good because I mean sometimes if something happens and you're doing a project and you don't necessarily have the cash right now, you can
Right.
utilize that and then pay it off.
Yeah.
and it's going to get reported as it's going to get reported, and it's going to show that you have good history,
Yep.
and that only helps you.
Yep.
So and so you can
Um,
ask for it, or sometimes they'll increase your balances for you, or
yeah.
your utilization.
So one of
So
the other things, so aside from trying to raise your score and improve it and stuff, one of the things that you can do to help protect your credit is, and I keep wanting to do it, but then I never do because we keep, there's always something like a new credit card or we're buying a car or something. But you can freeze your uh, you can freeze your credit with the three credit bureaus. Have you heard of that?
what was that?
You can freeze your credit with the credit bureaus.
Yes.
Yeah.
Yeah. So a lot of people do that when there is a potential identity theft.
A potential, or they don't, they're not planning on pulling out any credit, so they're just like, I'm going to freeze it just I mean, for that purpose, yes, or for younger kids who, because so here's one of the crazy things is, kids have social security numbers, they have date of
Mm-hmm.
birth,
Mm-hmm.
and people can pull their credit. Just because they're not 18 doesn't mean somebody who, doesn't steal their information, they can open up
Easily.
loans and credit and credit
Yep.
cards or whatever.
All of
So
that.
a good idea, especially for kids, is to go on each of the credit bureaus and freeze your credit. And I think it used to be you had to pay to go in there and freeze your credit because there was like a process and there was a form you had to fill out and so on and so on. I think it's all free
Mm-hmm.
now for each one. You can go in there and you put in certain information. Just do a Google search on how to freeze your credit. But you go on there and you can freeze the credit, especially for kids, until they turn 18 because they're not pulling any credit. When they turn
Huh.
18, you unfreeze it, you open up credit cards, and then you probably freeze it again because they're probably not going to pull any more credit for the next, several years, unless they're taking out student loans, something
Yeah.
like that. But
Yeah.
but yeah, that's another way you can help protect your credit is to freeze it. So nobody, and including yourself, you can't even go and open up a new line of credit without unfreezing it.
Yeah.
So anything
Yep.
that anybody that tries to, they're just going to come back with a message saying that this credit report or credit whatever has been
Yeah.
frozen. We can't
Yep.
do anything.
And it's kind of good for yourself too if you have like a nasty habit of getting your credit pulled. Then
Right.
you
Yep.
kind of saved in yourself. It's like, oh, okay, I guess I can't pull my credit here. Just
Yeah.
kind of doing some due diligence here for you, man. Like, you kind of gave me like a whole wave of like future ideas for for kids, like about like whole freezing the credit, or I
Oh
can
yeah.
educate them, and like
Yeah.
my mind went to like a very quick rabbit hole.
I,
But
s- I saw I
nothing,
saw it in
nothing.
your eyes. You're like,
Yeah,
oh.
yeah, like nothing to discuss tonight. But one of the things,
Okay.
like, so I bet there's a couple questions out there. She's like, well, what if I have a lot of debt and I want to eliminate? What are some of the best practices? So my wife and I we before we bought our house and before we got married. So we sat down with a financial advisor and we pretty much asked this question: what's the best way to eliminate this debt? And if anybody's looking for a financial advisor, let me know because I have a really good one because he really helped us understand our debts and understand best practices. And so he was saying you need to eliminate the debt with the highest interest rate first because
Yes.
that is the most money going out of your pocket.
Yep.
Whether, if you have a $1,000 loan at a 3% interest rate, but you have a $10,000 loan at 7% interest rate,
Right.
the best practice is to eliminate the $7,000 loan or the $10,000 loan with the 7% interest rate.
Right.
Because that's more money. It's like, well, I only have $1,000 here. Yeah, but like over the course of time, they'll calculate it. It's like you'll spend more money on this $10,000 loan just on the interest alone than you would on $1,000. So wouldn't make
And
sense.
that's a very true statement. There's also the psychological aspect of it, and
I
I think Dave
know.
Ramsey sort of plays into this. So your example, I have $1,000 in a 3% loan, but I have $4,000 on a 7% or whatever you said.
Mm,
So some people might say, and I think Dave Ramsey is kind of a proponent of this, is yeah, I mean, obviously you want to save the money and you want to pay down on the 7% interest loan, but psychologically, he might tell you pay that $1,000 loan off because now it's like doing the checklist when you make your to-do lists and you cross through that
Hmm.
item. There's a psychological effect that happens in your mind that says, "Wow, I accomplished something." So when you pay off a debt, whether it's a high
Yeah.
interest or a low interest, you're accomplishing something. So then that then fuels the motivation to now pay off more debt and pay off more
Yeah.
debt as you. So sometimes you can start with those smaller amount of debts, the $1,000 or the $500 debt or whatever you have, and
Yeah.
then what you do is you take those minimum payment or whatever you were paying towards those debts and you
Hmm.
snowball them into those bigger debts.
Right. So I fell into that trap,
Okay.
and I kind of call it a trap because yeah, it's a psychological checklist. Like, cool. My payment I just freed up $200. Now I'm gonna go ahead and combine this $200 to my $300 payment. Now I'll pay $500 on this, and I'll pay it off quicker. You think so, but no,
Right.
because now you just freed up $200. You're like, I'll keep $100 and I'll put $100 over to that one
It
instead.
it
So
100%
like
takes discipline.
that's exactly what I did. I kid you not.
Yep.
so
You got to have the
so
discipline.
it's, but I guarantee it, because the moment you start freeing yourself and you start seeing more money in your pocket, because I am guilty of this. I speak of experiences
Yep.
that I am a horrible spender.
Yep.
Because if I have money, I want to spend it
Oh,
because
of
I came
course.
from a place that didn't have the luxury of spending money.
Right.
So
But you
I
you
didn't.
can't.
I had that snowball. I had that snowball idea, and I didn't. I didn't.
Yep.
I didn't do it.
Yep.
I did not combine my 200 with my 300 to make a $500
Right.
payment. No.
Yep.
Instead, I just kept $100,
Yep.
and I went out and
It's
spent it
yeah.
instead of doing that snowball.
It's very easy to do exactly that. You have to be
Yeah.
disciplined and you have to do it before that extra, you pay off that debt and then that extra payment shows up in your bank account and you're like, "Oh, well, where'd that come from? I like that." You
Yeah.
have to go ahead and
Yeah.
you're like, "All right, that one's paid," and then it's auto into the
Yeah.
next one. So you never even
Yeah.
see it in your bank account.
Yeah. Yeah, you can do that. If you do, I would definitely recommend auto payments. I have auto payments for almost everything,
Oh yeah.
and I always do that combo. But
Speaking of
I
speaking
eliminate the
of
highest interest rate first every time.
speaking of auto payments, so my lender, working with them, I was talking. One of the things you can do to raise your score, and this is something that I just learned about. I think it's on Experian. They have a program where you go in, you fill out a couple of things, you give the system access to your bank account. It goes through and it searches your bank account for auto payments. So if you're paying your mortgage through auto pay, if you're paying your car loan through auto pay, it can actually go through and seek those things out and it will in turn say, "Hey, okay, he's got some auto pay. We know he's paying everything on time." And it'll raise your score with Experian. I don't know if the other ones, TransUnion and whatever, if they
Yeah,
have it, but yeah, Experian. I'm pretty sure it was Experian that had it. But yeah,
mhm.
it'll go in there and it'll raise your credit score a little bit. It takes about
Which is cool.
a couple of weeks to do, but it was something I'd never heard of until
Mhm.
maybe 3 weeks ago.
You can also do that for your rent,
Yeah.
utilities,
Okay.
and stuff like that. But not
Yep.
every single creditor is going to do the same practice. Like if I think Experian is probably the most publicly out there, just like with trying to have more interactions. I think if you pay a certain amount, it'll kind of give you updated prompts and stuff like that. I think it's Experience that's more uh, user friendly, but not user friendly, but like just commercialized. They spend money in advertising about who they are
Right.
versus TransUnion or Equifax. Um, but like not every single one of them is the same practice. So sometimes like if you have like these thoughts, just kind of do the forward or the critical thinking, being like, if I do this, will it help all three?
Right.
I would call them and be like, hey, I'm looking. Do you guys have a program that
Right.
allows me to report my consistent payments on utilities? If they say, yes, we do. Awesome.
Yep.
What are the forms? What do you need? Cool.
Yep. Yep.
Excellent. And if two of the three report it, but the third one doesn't, it still would be beneficial to do that. But if only one, there you go. I love that sound. But if only one out of the three, then, like one is better than none. But you just want to see what's going to help you across the board and
Yep.
eliminating your debt. Highest interest first is definitely the most recommended
Yep.
by my accounts.
Yep.
If you have the discipline for the snowball, by all means, do it. I don't think there's a wrong. I don't think that's wrong what you're saying
Just
at all.
I
It's just
at
a
the end of
different
the day,
practice. It's a different
at the
method
end
of
of the day,
practice.
paying off debt is the most important thing. Whether you pay
Hmm.
off the highest
Hmm.
interest debt or the lowest interest debt, paying off
Yep.
debt is the most important thing.
Yep. And then
If you want to save yourself the most amount of money, then obviously
mhm,
start with the highest interest, like you were saying, and then
yeah.
you have to snowball it into the next one, and then when
Yep.
you pay that one off, you snowball it into the next one and the next one until
Yep.
before you
Yeah.
know it, you're paying buku dollars
Yep.
on one
And
on your last remaining
yeah.
amount of debt.
Yep. And every time you eliminate a revolving debt, don't go and open up something new. Start saving that excess money so you can have money for a down payment and closing costs. And then
Yep.
as those happen, as those payments get paid off, make sure you ask for those payments, that clear, and then make sure it gets reported to the credit bureau. And you can do that by calling that, not by pulling your credit, but by calling the servicer that held the loan and be like, please make sure you report this to all three credit bureaus, and then get it in writing. And then you can contact the credit bureaus and be like, hey, did you receive this payment? No. Okay, well, I have it. Um,
Right.
and as well as trying to maximize or minimize your credit utilization compared to the max credit limit. Try to increase your credit limit as much as possible. And don't think you can do this in a short period of time, like a week. You have to play the long game when it
Oh,
comes
definitely.
to building your credit, okay?
Yep.
And eliminating credit and eliminating debt. It takes a long time, and you have to be very patient. This is where discipline kind of comes into play. And then doing a self financing meeting on a regular basis. So sit down, look at your finances, and then just make sure that you're not over leveraging yourself. Make sure that you're properly doing this. If you're having a hard time with this, seek out a financial advisor, and then ask them to sit down, tell them everything about your financial life, and then they will build you a roadmap. And then really show you how you can eliminate debt over a certain time. A lot of these companies have great software that will show you what is the best way to save money and eliminate debt and increase credit.
Right.
They have it all.
Yep.
So um, I don't know how much more we can hammer on this nail,
Well,
Jared. We're
let's.
approaching an hour and a half here.
I know. I wanted to talk about the debt to income ratio real quick. So I mean, so let's say you know about all the different loans you've worked on paying off debts. You've worked on raising your credit score, and you're ready to buy a house or whatever. So the debt to income ratio, and this is we kind of touched on it a little bit at the beginning, where you know both Chris and I both thought, before we got into real estate, that they would take your entire debt that they found that they added up on your credit report versus your income, and then divide those two things together and come up with your debt to income ratio, or your DTI as they call it in the biz.
Yeah.
But but some of the things, so what they look for, so let's say, just so you have an idea of what banks are going to look for when you're applying for a mortgage, and it kind of holds true for like auto loans and some other stuff, but some of those other loans, they have a lot more flexibility than mortgages do. But so you have something that's called a front end debt to income and a back end debt to income ratio. So the front end is basically just all your housing expenses. It's going to be your property tax, your HOI, your homeowner's insurance, your HOA,
Hmm.
and your mortgage. So basically, what you would do is you would add those up. So like I wrote down an example. So let's say your front end example. Um, when you add up your all those four things, essentially taxes, insurance, HOA, and your mortgage, let's say it's $1,800 a month, and let's say you make $6,000 a month. That's a, a decent salary there.
That's a very
Uh,
decent salary.
so 1,800 divided by 6,000, that comes out to about 30% debt to income ratio. So 1,800 divided by 6,000. Um, a lot of banks, when they're looking for when you're going to get a mortgage on the front end, on a front end DTI, they're looking at about 28%. Now, obviously, it's going to be a case by case basis, but the average, I'm sure, is like around a 28%. If it's more than that, they're going to look at, okay, well, why does why does this person have more than 28%? What's going on? So that's the front end ratio. There's a back end ratio. So
Hmm.
basically, it's the front end ratio plus all your other expenses or your loans,
Yep.
such as, and there's, when I say expenses, it's there's a certain amount, or there's certain types like auto loan. Let's see, I wrote them down here. I'm not gonna lie, I'm reading my notes. But basically, it's like auto loans or student loans, as we talked about. Um, what else? Credit card payments. Yeah, there we go. Credit card payments,
Yep.
personal loans, all those kind of things. Those are going into your back end. So it's your front end or back end. So what the back end is looking at, what banks like to see, is somewhere around 36%. And again, if it's more than that, it's going to be a case by case basis. If you're better than a 30%, 36%, then
It's pretty good.
chances are you're going to be good to go. But if it's more than that, they're going to dive in a little bit deeper and see, okay, well, how, what can we do, or will are we still going to loan him? Are they going to be getting a pay raise? Are they just starting a new job and they're guaranteed a pay raise here in the next 6 months, or whatever the case is? Um, but keep in mind some of those things, based on what I've read, that are not included. So don't include like your health insurance costs, your transportation costs, anything that you contribute to your savings account, or like your utilities or entertainment or food or clothing. None of that stuff goes into your monthly, when you're calculating your debt to income ratio. So it's just those are any basically, the way I look at it, anything that has a minimum payment, such as a credit card or a personal loan or anything like that that has a minimum payment due, that's going to be calculated into this debt to income ratio.
Hmm.
So it's you know the only way to increase or improve that debt to income ratio, the basic ways, is you either got to ask for a raise, you got to make more money, or you got to pay off some debts. You pay
Hmm.
off some debts, that makes that spread a little bit bigger.
Yep.
You raise your income, that makes that a little bit bigger. Other than that, I mean, not a whole lot you can do to to change that, but
Yeah.
um, it's a a daunting task to try to figure out every little expense that especially if you, let's say you have those 21 lines of credit and you have a minimum payment on every one. Holy crap, man, that's going to take a little bit to figure out how much you're actually, spending, or your expenses every single month.
Hmm.
So,
One of the things that I do is, and this is, if someone wants to find out a little more about it, is that I actually break up my accounts. I have several accounts, business and personal. So
yep,
I have a play account, So that will entail, going out or groceries, gas, and things of that nature. And then I have a monthly expenses account that handles all my bills. And then I have a goals account that my wife and I share, to where
Mm-hmm.
we will, anything that we have for future vacations or future home projects, we'll put money there. And then we have a savings account, or a housing account, where
Right.
pretty much anything housing related, so your utility bills, your water, your electric, the mortgage, and anything else related to the house will go there. And so it's really taking a hold of your finances and then doing a percentage based on what your income is, and then allocating the appropriate funds based on what is needed on a monthly basis. And it'll really shock you, because the first time we started it, we were actually in the hole for about 2 or 3 months. But after 2 or 3 months, we were able to save our and get out of our hole by being consistent and just going through the squeeze, like the
Mm-hmm.
hardship of like not having expendable money to do the stuff that we were doing,
Right.
because we were going check to check. But when you properly allocate necessary money, you'll see things that you don't need, and then you'll be able to manage, and you'll be able to breathe a lot easier knowing that money is going to the correct places, and you don't have to worry about making sure that you have enough for bills. So
Right.
it's really just taking a hold of your finances and then starting there. That's probably one of my biggest recommendations, is starting is to find out what your total expenses are, find out where all of your
Yep.
monthly expenses are, and then on the
Yep.
revolving debt side for your
Yep.
monthly bills. So Netflix, Spotify, um, car,
Yep.
phone, insurance.
Yeah.
I have a whole spreadsheet for it. And the
Oh
thing is
yeah.
that every time I get paid, a
Yep.
percentage gets allocated to that,
Yep.
and I make sure that it's covered.
And
And it,
it's
it makes things so much easier to just
yeah.
monitor, because it's all separate. If I want to
It's a
look at a
good
bill,
idea.
go straight to that account.
Yep.
Boom, there are all my bills. I don't
It's
have
a
to
good
surf.
idea to keep track of
surf
all that stuff. You
no,
know, if you don't know how much you have going out, then you're
yeah,
you're most likely spending money that you don't need to be spending.
yes,
You're
all the
you're
time.
you have
If you're
subs
not monitoring it,
if
you're
you
right.
have
You're
you're
sure,
gonna have
100%.
you have subs especially now in the subscription day where
Hmm.
everything is a subscription. It's so easy to have a subscription. You're like, it's just a couple of bucks, or $10,
Couple
who
bucks here, couple
whatever.
bucks there.
But $10 over a year, that's 120 bucks times 4 or 5 years, and you're not even using whatever it is. I tell you what,
Yep.
send me $10 a month for the next 5 years. I'll be okay with that. But
Yep.
if I were to tell you that and be like, get out of here, I'm not sending you $10 a month, but you're sending you're okay paying for some of these subscriptions that you're not even utilizing to these big companies.
Yep.
It's the same thing.
Yeah.
Send me ten
It's
bucks a
it's
month.
true. It really is. It's so true.
Yeah.
Like, I guarantee you, if you have been neglecting your finances, and you want to get motivated to correct it and better yourself, sit down, go through your finances. If you
Yep.
don't know where to start, reach out to me. I'm happy to help. I'm happy
Oh
to show
yeah.
you examples, exactly what I'm
Yep.
doing. It's a really simple recipe. Go online, try to find people who have been in your shoes, because I've been in your shoes. And then nothing will motivate you more than seeing how much frivolous spending you are doing on yourself.
Mhm.
And it'll be like no freaking wonder. And your whole mindset, you'll watch it change for the better. And I love where I'm at
Yeah.
in my financial literacy, because if I can go back in time and tell 20 24-year-old me to tell my my 18-year-old
Oh
me
yeah.
what I know
100%.
now, oh my god, my life,
Right.
I would be 10 years further than where I am right now.
Yeah.
You know,
Well,
easily.
here's the thing. I mean, when it comes to when it comes to finances and what kind of debt you have and your income and all that stuff, people get shy and timid, and they don't. It's kind of like, we don't talk about what I spend and what I make,
It's
and
almost taboo.
it's a taboo kind of thing. And it to be honest, what opened me up about finances and investments and taking control of what's going on was I flew with this one captain. And he was a financial advisor, and the first question he asked me, like after we took off, and we're to that, just we're just gonna chat mode. He just looked at me. He was like, "So how's your 401k doing?" I'm like,
Okay.
"Who are you? How do like?" I was like, but then what it got me thinking was, well, heck, I don't really know. Like I was like, I've got, and my answer, honestly, it was, I mean, I don't know, I've got some money in there, and I think it's doing, it's done like a like couple percent, last year, or it did good. Or he's like, but do you know, like, do you have specifics? And I was like, no, I don't. He's like, so then we spent the next couple hours like chatting.
Yeah.
That's what
And he gave you a good
that's
education, right?
and he gave me good education. But the biggest thing I took from it was, it's not taboo. If anybody asked me, I'm not going to sit here and talk about it on the show, but if anybody asked me, like, hey, what are you doing? What do you have in your 401k? What are your investments, or how do you handle your finance? I'm open about it now. I don't sit here and I'm not going to talk about it on the show and everything. But if somebody wants to know, like, I don't have any issue talking about it. Whereas before, and to be honest, like before I talked to this captain, I was like, I don't know. I don't even know what's going on. Now
Yeah.
I keep track of everything. And you got to keep track of stuff. You got to keep track of stuff. I mean, you can buy a house, you can do all this stuff and get away
Mhm.
and get by, but you're just going to be getting by. You
Yep.
really got to take a hold of, you got to grab the reins of the horse and steer the horse. Don't
And
let the
yeah, you
horse,
have to
take
control
you.
it, man. Exactly.
Yep.
You can't be in the storage compartment and of the carriage and
Yep.
not control it, or else you're going to go off a cliff.
Yep.
Like the rich are rich because they have the control of their finances, and they've
Yep.
leveraged the system, the game of
Yep.
Monopoly. They've
Yep.
learned how to play the game of Monopoly.
Yep.
Therefore, they're there. You
Yep.
can do that. Anybody can do that.
Let me tell you though
And
something.
the best.
I suck at Monopoly.
Me too. Me
I
too.
go
But
in and I
it's the
try to
best analogy
buy.
I got.
See,
It's
maybe this
the
is the
best
real
analogy
estate.
we got.
Maybe this is the real estate agent in me. I When I play Monopoly, I go in there and I try to buy like everything I land on. I'm like, oh, I want it. Yep, I'll take it. I mean, especially if I land. But then the problem is, I land on Park Place, and I'm like, crap, I don't have any money. I can't buy it. And then somebody else who been saving, they haven't bought anything, then they buy it, and then they win the, the game.
I don't
That's
know about that.
Yeah, I don't know.
Yeah. The the thing is, like, anybody can become a multimillionaire just through real estate. So that's, if you look at any Forbes, like Fortune 500,
Yep.
9 out of 10 of them will, they got their fortune through real estate Mongol.
Oh yeah.
Okay, so like, I mean, our former vice president, former president, Trump, he started off in real estate. That's how he got his millions. And so like anybody can do it, like, it, just by buying, holding, selling. You don't need a real estate license. Just buy one property, and then find somebody that you can relate to that has multiple properties, and ask them, hey, how'd you buy multiple properties? Chances are they didn't have just like frivolous money. No, they leveraged money. So
Right.
that's the game that you can play, and you don't need a
Right.
high school, you don't need a college degree, you don't even need a high school degree to do
Right.
it. And the thing
And
is,
to
you can
be
become a very wealthy and financially free individual for you and
and
your family.
to be honest, I mean, we're kind of getting into a whole new topic of,
We are, but
investment
it's true. But
and
it
things.
goes right
But
back to just owning your finances. Own it.
yeah, owning your finances. But the topic of tonight was owning your finances through just knowing how to control your credit score, how to improve it, how to improve
Mhm.
your debt situation, um, knowing what is impacting your credit scores, what kind of loans you're
Yep.
taking out,
Yep.
how they impact your credit score, and everything like that. So, you know, you start figuring that stuff out, then I would say then start looking into, okay, now that I've got my credit score and my loan situation and debt under control, you can have debt and you can still invest. You can still
Mhm.
leverage money and invest in stuff. There's nothing wrong with that. It's just how you go about it, you know, is going to be the biggest factor. So, but
Yep, I agree
yeah,
100%. But the thing is,
I
like, what we just kind of talked about is just like it's like the benefits of taking control and, tackling your loans, tackling your debt, and tackling
yeah,
your credit. Um, and then going at and that's what ultimately is going to come of it, because the moment you start tackling these beginning stuff will allow you to become financially literate, and allows you to go to the next. You're like, okay, this is cool, I got a hold of this, what's next? you
100%.
know
Yep.
yeah, cue it.
Yep.
You're going to be able to build from there, because now that Bethany and I, my wife and I, have like true control over our finances, we want to be able to elevate and create generational wealth. And that's how everyone in power pretty much got it.
And
Unless you created something that is technologically just
yep.
superb, don't try to create. All right, don't try to create something new that no one else has ever done before.
Yep.
You know,
And it's
just
funny
play
that
the
you
game.
use that.
Play the game.
It's funny you use that term generational wealth, because that captain I was talking to, that's what he really harped on. Is he's like, well, what's your legacy? And I was like, what are you talking about? He said, your legacy. Like, what are you leaving behind? Like generational wealth, and what are you leaving for the next person to? I was like,
Hmm.
I don't know. I never thought about that. I was like, I'm trying to get by for me, and
Yeah.
you know, so, but like I said, man, I love talking about investments. I
Money.
love talking about this stuff. It's so
Same.
much fun. And to be honest, before I started really getting into it, and it all goes back to that one guy that I flew with, and he just really opened my eyes to keeping track of this stuff and taking it by the reins and just running with it. Whether you do good at it or not, but just the fact that you're doing something with it
Yeah.
is better than nothing. Just letting that $10 subscription, that $10 a month subscription, just go by without you even knowing it was there. You know,
Yeah.
like I said, give me access to your bank account. I'll figure out the ones that you don't know, and I'll just start sending $10 to my account.
Yep.
You know, but as soon as you start sending me $10, you be like, well, wait a second, I don't want to give you. And you're like, well, you're
Yep.
getting you're
Well,
paying ten
you're
bucks
doing
for
it all the
nothing already.
time.
Yeah,
Yep.
what's the difference?
So,
But
with that said,
anyways,
to hit us up if you have any questions regarding loans, debts, credit scores, or if you're already established and you want to know what the next step is. So, cheers
100%.
to you. Cheers to Jared. Cheers to myself.
Cheers, guys. Thanks for being
Thanks
with
for
us.
watching.
Thanks for commenting. I know we
Thanks
had
for
some good
listening.
comments. Thanks for listening. You
We
can find
did.
us
We
on
did.
Spotify, on Apple, on
iHeart.
iTunes, iHeartRadio, and if you want to watch us, you can find us on YouTube, Facebook,
Twitch.
Twitch. We're on there. I don't know if the videos stay. I don't think the videos stay on there, but just go to
Okay.
YouTube, like, subscribe, and follow or whatever. I don't know. Whatever these kids are doing these days. I'm gonna turn this outro music up so you can't really hear me talking anymore.
See y'all.
Play that air guitar.
Thank you, Dalton, for sticking with us. Cheers. Cold beers.
I told my buddy Todd Angel I wouldn't say his name, so I told him I'd work it into the conversation, and then I never did. Todd Angel,
Fail.
thanks for watching. He's sitting in his hot tub.
Deuce.